Welcome back to another episode of Backholder Pod. Today we don't have our host Chicken, but three of us is still here, and we are going to. It's not out. Hi friends, welcome back. I don't know how to open that. Wait, can I give up or not? 我要死了啊，真的是。
Hi guys, welcome back to another episode of the Backholder Pod. Oh shit.
We really take chicken for granted, leh. Nobody even knows how to say backholder pod. Welcome back, everybody, to another episode of Backholder Pod. Today we have Kelvin, Bunti, and myself, and Bunti will kick us off with our first topic for today.
Okay, our first topic today is Singapore Bank DBS. They just released the numbers for, I think it's Q1 numbers. So I'm reading the headlines here. The Q1 profit jumps 43% to new high, beat estimates. So I think Singapore Bank's DBS, I think is the first bank that report the earnings. And I mean, from the surface, it looks good, right? So I just want to kick it back to Eric, see what's your impression on their earnings result.
I think to me, those are really mind-blowing numbers. 10% quarter on quarter, right? That's insane growth for such a big bank. I think DBS should be the largest bank in Singapore already. So if you can achieve like 10% quarter on quarter, not year on year, quarter on quarter, 10% growth, I think that is crazy good. I'm really happy that I hold a bit of DBS, but I'm not happy that I hold only a bit.
Yeah.
I should have hold more. Any one of you guys are shareholders as well?
No, I sold my DBS share a long time ago.
Yeah, no for me as well. I only have some exposure via the ETF, STI ETF. So DBS is still the largest constituents. It's very, very minimal.
But I think that this growth is just like a spike, a temporary spike, right? Because if I see the news, right, it says like this higher growth was attributed to net interest margin, means that they get the deposit money and they lend it out. That's the net interest margin thing lah. The difference in between the deposit and the lending out. Sustained business momentum, fees income, corporate loan growth, and net new money inflows and resilient asset quality. So all these are like, it feels like temporary stuff that's caused by all this higher interest rate thing. And people are just finding safe havens to park their money lah. So, and DBS is one of the, okay, their interest rate is not the best compared to other banks, but at least they are still safer compared to like First Republic. So that's why people are willing to park money into these banks, even though the interest rate is not that good lah. Then when all this interest rate goes back down eventually, end of this year or next year, DBS they will no longer have this kind of insane earnings.
Yeah.
So I would say, yeah, the price, it seems like it has priced in because DBS hasn't really moved yet, despite this good news.
Yeah, I think for banks, right, especially like Singapore banks, usually when interest rate is higher, so they can charge a higher interest rate, and even the margin, the one that you just mentioned, right, also expanded during higher interest rate environment. So when interest rate drop, they can't earn that much, so they suffer. The question is more like now, is it time that interest rate already peaked? Because we can see that with the higher interest rate, there's some slowdown here and there. Maybe except for Singapore, because I think Singapore real estate market is still doing well. It seems that the high interest rate doesn't leads to like slowdown in like house buying. So I think they're still doing good. Is that they pocket higher interest rate margin on one hand. On the other hand, all these real estate transactions, they also get a good volume of business. So I think the result is good for them.
Hey guys, you know what?
What? Your stock 10x?
Not yet lah, but Weeboo is now giving out free shares when you sign up.
Yeah, the brokers also giving out free shares.
But Weeboo is different leh. For Weeboo, you just need to fund any amount to get up to 5 free shares for now.
Wow, any amount?
Yes, any amount. Just fund $1 also can. Then you'll get up to 5 free stocks worth up to $500 leh.
So if you haven't signed up to Weeboo yet, you can sign up using the link down below.
What lah?
So I want to ask questions to Kelvin. You sold DBS some time ago, right? Looking at the results, looks good, and then US side, it looks a bit scary. There's some, bankruptcy here and there. Do you plan to like shift some of your money back to Singapore and just invest in like safer assets like DBS, OCBC, or even some REITs?
No, not in the short term. Because if you see like DBS, okay, I'm looking at the 5 years capital gains. It's like 12%. 12% divided by 5 is like 2% annualized return. Okay, add in the dividend yield is like 4%. So it's like annually you will get about 6% returns. 6% returns. For me, I'm on a goal to hit 1 million, hopefully. Then this 6% is, to me, is not that enough because first, my capital is not high. It's not a lot. So I'm looking for a higher growth kind of stock. So that's what I'm going into. I went about 3 years ago, I stole all my Singapore stocks and went into US stocks. And the good thing is I get to sell options. It's a good and bad thing. The bad thing is I'll get to lose money also. So I think it's a high risk, high return. So that's what I'm looking for. So that's why I'm not going back into DBS anytime soon.
But that's historical, right? You don't know, like now, given this kind of good results, can it sustain for another few quarters or another few short years? Then capital appreciation just shoot up to the moon.
Yeah, maybe it will. So if I see like I drag even long term, since 2005 until now, the stock has doubled in price. So it was around what, $15? Yeah, somewhere around there. $15. Now it's like $30. So it's like they doubled their price. So it's not impressive, but the impressive part is their dividend yield. They have managed to keep it quite consistent. I guess that's why Eric, he wants to invest in DBS.
Among the 3 banks, the strongest I feel is DBS. Like the other 2, I mean, they are also okay, but the most cutting edge, and I think investors are willing to pay a premium for it compared to the other 2 banks, because DBS is, by size, they are the largest. And in terms of dividend payout, they are also most consistent. If you check out their dividend payout, the trend, right? They have been trying to increase it ever since the COVID time, when government forced them to put a cap on it, right? But after they lifted the cap, I think the DBS has been slowly adding back to their former peak. So I think, even in terms of like not looking at capital growth, just the dividend itself, right? I think it's about 4%, if I'm not wrong. Yeah, so I think it's pretty okay if you just hold on to it and then just let the dividend roll in. Yeah, and then just wait for the next crash. I mean, you wait for the next crash and then you see a good opportunity, then just buy in. I think at our age, we probably have the patience to just wait a little bit for a crash. The last time it happened was COVID, right? I quite regretted that I didn't have the guts to go in big. Like I only bought like a few lots of DBS.
So I think DBS, right? I think the stock attract like the investors that looking for dividends. So let's say, for example, you compare those who invest in like tech stocks, Tesla, they keep on talking about the tech, the self-driving, all this, like the advanced stuff. But when talk about DBS, right, nobody talk about the products. We keep on talking about, dividend, 4%, kind of like, I mean, for youngster, maybe this is like very boring, but for those who have real money, like those who, closer to retirement, not talking about you, Eric. So they will prefer to have that 4% dividend, and that one is a good returns, right? So I want to ask, like, not sure, 2 of you, like in terms of the user experience dealing with DBS, are you happy with that? Because I personally have this experience of applying DBS credit card not too long ago, I think few months back. So I mean, I fill out the forms, which is very fast via just log in and fill up, right? Then on the spot, it just issue like, okay, this is your credit card. You can use it immediately. So I was, okay. So just port it to the Apple Wallet, and I have the software card ready, and the hardware, the physical card will be mailed to me like within like 2 or 3 days. So to me, that was quite impressive because I haven't got the kind of like wow experience. This is the first time dealing with traditional banks and still get wowed by it. So that's my personal experience, and I think that they are doing well in terms of on the product and fintech side. So I want to ask Eric, like, have you deal with, are you their customer? Have you been using their products? What's your feel when it comes to comparing their product versus their competitors?
Yeah, I'm a POSB customer, so I've used their apps and everything. I think it is the very first one that really impressed me was about 5-6 years ago was the OCBC. I think they were the first to like have really impressive mobile banking, like very very good interface and all that lah, user experience, everything. Then after that, I think they slack off, and it became like okay, like sometimes there's some glitches here and there, but still usable. I should say it's still usable. But DBS caught up quite a lot. I would say during around the just before the pandemic times, and even during the pandemic, they grew quite a lot. And I think if you remember, they were like one of the first banks, right, to say that they will start to incorporate crypto. Like not to say like trade in Bitcoin and all that lah, but they want to facilitate crypto into their system and all that. And then I noticed that their interface, user experience for their apps, right, all very intuitive. And at some point, they actually, I think around 3 years ago, they leapfrogged the OCBC in terms of like their offerings for multiplier account and all those things. They became very competitive. I don't know whether you guys remember how many years ago we had this maybe very long ago, I think 7-8 years ago. They have this 360 OCBC. When it first started out, right, they give like 3% for the savings account, which was like totally awesome, right? Because all the interest was like 0.1 or something. Then they give like 3% if you do a credit card and credit your salary and etc., right? Then they give 3%. Then it can be bumped up to 3 point something if it's like you do more transaction, which is great. So I used it for a year. I got 3% for that year. So I was very happy with OCBC. Then after that, they nerfed their own interest and all those things. Then I'm like, sian. Then after that, you see UOB and DBS start to play catch up lah. They also offer multiplier account, one account, and all those things. I think this one maybe Kelvin or Chris will know better. So like I mean, after all this competition, right, you notice that the one that actually continuously upgrade their offerings and like what you say, right, to wow their customer is, I would say, DBS. Like if you use their products, they are more intuitive. They feel like they're keeping up with the trend. They're investing a lot into their IT. I'm not very sure if it's because of their IT team that is very good.
Yeah, I think the tech infrastructure is very important. Yeah, if not, right, even if they have product in mind, they want to roll it out also. If the backend support not able to do it, they can't do it. So I think the technology side is very important. So what about Kelvin? Have you have good experience or bad experience dealing with DBS or any other banks that you're using?
In terms of experience, DBS will definitely be the top lah. I've used worse banks before. So I wouldn't name them.
For example?
No, for example.
Which
So like
bank?
DBS, the whole ecosystem is very quite expensive, very, very wide lah. That I don't even know like most of them. The ones that I know are mostly the stuff that I cover on my YouTube channel. So the first is they have a big social media presence on Facebook. Yeah, then they're offering all those like robo-advisor, the SG Findex to track your wealth. Then the crypto thing that Eric was mentioning, that one actually is for rich wealthy investors, so not for people like us. So I don't think any other banks is offering that right now. So DBS is still at the forefront of all this technology stuff. But with that being said, I got a question to ask Eric. If DBS is the largest, that means they have more or less matured already. Their capital growth may not be as fast anymore. In that case, why not just focus more on the smaller bank like OCBC? It has a much bigger potential.
No lah, I think we can't look at DBS like just local clientele. They are more like a regional bank. Yeah, they serve people from, I think the rich people coming from other countries. they set up like home office here and all that. Yeah, I think we got to consider like, and also by right, Singaporeans are also quite a lot of Singaporeans are getting very rich, right? You see all the
Vision.
HDB all crossing 1 million, even the 4 bedrooms all
It's
crossing 1
just
million.
that one is just rich in assets only. If you just that is the
Like
that's
the
the thing that
banks,
you cannot take out.
the banks don't care about you whether or not it's an asset or liability or whatever you want to label it. They only care that you do transaction, and then they facilitate, and then they give you the mortgage. I think I don't know whether you guys saw this guy, Grant Cardone or something like that. So he's a US real estate person, entrepreneur. So he was saying that like mortgage, right, it is a product created by banks so that they can sell you money. Very interesting thought, right? He told the people like, hey, don't buy real estate when he's a real estate uh entrepreneur himself. But the reason he gave was that the banks, they actually using it as a reason to sell you the money so that they can lend you money and then they can make money off you. Yeah. So their main product is actually money. Very, very interesting, right? So I think banks don't really care what you buy. Like you can buy cars, you can buy houses, but houses are less risky for banks, right? Because it's a something that they can repossess back if you fail to pay.
Yeah, there's a collateral.
Yeah, lor.
So,
So yeah lah. So I think in terms of like inflation, everything, right? I think Kelvin mentioned that is it a short-term thing? I think the Gupta actually said that the interest, right, is going to be a tailwind for a few years. He said that I think like maybe last year when the Fed hasn't really increased very fast, he said that if is interest rate going up, right, it's going to be a tailwind for us banks for a few years. But he didn't really say will what big lah. He just said it will be a tailwind.
tailwind means what big, because like we mentioned, if interest rates stay high, they just pocket the margin. They
Yeah.
just keep on charging to the whoever that has mortgage. I think this is really good profits for the shareholders.
Yeah.
But speaking about investing in banks, right? I think we also discussed in the past, especially for those US banks, because there are so many banks that went bankrupt this year, right? So there's always this fear that, okay, they are relying on their deposits, and if their deposits just run away, then they will just straight away bankrupt, right? Which happened to the First Republic Bank, which happened during the weekend. I think it was just announced 1 or 2 days ago. Like first it was seized, right? The banks, the deposit was seized by the regulators, and then now I think it has been finalized that JPMorgan will acquire the entire banks. So I think this is quite a large bank. Like last check, it was about like 200 billions total assets, which is, I think, I read the headline. It says that this is the second largest US bank failure. So it's not a small bank, but I think in terms of size, they are similar to Silicon Valley banks. So to me, I'm quite, I wouldn't say surprised, because given that in the past 1 month or so, every time there's all this, like fear coming in, First Republic share price will tank, right? So it happened quite a few times already. It's just that now finally, it happened. So this bank has went under. So I want to kick it back to like Kelvin. What's your take on this? Like, how come, on the Singapore side, DBS Bank is doing good, and then US side, the banks are like lining one by one, going bankrupt? What's your view? Do you think more will come?
I think more will come. I suspect so. So after that whole Silicon Valley Bank, was it the Fed or the government that stepped in to guarantee the customers' deposits, the people's deposits? But it seemed like it didn't manage to stop the outflows from the banks. So then last week, the First Republic Bank mentioned that there was like 40% outflow from their account. So then over the weekend, you had to just shut down already lah. So I think if 2 has fallen, more will fall soon, especially the more dangerous ones. Then like last week also, JPMorgan and Wells Fargo also announced their earnings result, and they were quite safe. But so it's not all banks, it's just the riskier banks like the SVB and this First Republic. So local banks like DBS, all these are quite safe. I think Singapore Singaporeans have nowhere else to run. Sad to say. So because like where you can run, if you withdraw money from DBS, where else can you go? OCBC, UOB. There's just these three big banks. Right? Of course, you can go to the smaller banks like HSBC, or wherever. But people by default will always go to the bigger banks, ma. So so by default, local banks will be very safe, lah.
Yeah, so these First Republic banks, right? I don't know, like let's say someone asks you like why this bank just go under, right? Can you explain in like a simpler way to describe how come a bank that seems okay suddenly just go under?
I think from what I see, the short clips, right, on TikTok, I think it was just like a bank run, and then very quickly they took it over, FDIC, and then they seized the bank, the assets, and then they sold it to JPMorgan. Like it was done like within a day or something. So it was not even like a few days, and then the typical CEO come out and say, we are okay, our assets are safe. They don't have that kind of a prelude anymore. They just straight away, okay, take over, okay, sell to this guy. And then I think from what I heard, right, I think the FDIC or the government actually paid make good on the losses, whichever losses that they have, right? And then JPMorgan, for their part, when they brought it over, right, they actually net a paper gain of 2.6 billion, something like that. So it's very interesting, right? Like the government actually backstop the losses, like, okay, we absorb, okay, we take all the losses, and then you take over these loans. If any more losses, right, I will backstop also. then the CEO, of course, like, okay, no risk. Then okay, I buy, got profit. Then he take up. So I think it's a very sweet deal for JPMorgan, but the commentary was that they are not sure whether is it legal or not. But they say that they banned the rules because JPMorgan, as of now, they already control like more than 10% of the deposits in US in terms of size. They manage like 4 trillion, something like that. Then I think the US, the whole banking system, can't remember. I think it was about 30 trillion, something like that. And then so they have more than 10%. I saw this from a clip. So maybe you have to go and verify the exact number. But I think the way that the deal was being done, right? I also feel that it's very, very hastily done. Like under the okay, quite in. Let's get it done and settle this. Make sure that this doesn't develop into a contagion, which is a little bit sus if you ask me. Like little bit.
I think when US government do this kind of thing, also there's a reason one because they have power to do a lot of things, but taking over a bank and just run the bank, run a private bank, that means the government run the private bank, is not something they want to do. So even they want these banks to be absorbed because I think their priority is to protect all the depositors. So it has to be taken by another bank. But which bank can take it also is a question mark because not like every bank has the appetite to take on. But there's this quote coming from Jamie Dimon that is quite interesting one. So I read out the quotes. He says, "Don't do anything stupid and don't waste money. Let everybody else waste money and do stupid things. Then we'll buy them." So I think that's quite an interesting quote. Is that okay? What they do is just like waiting for others to be be problematic, and they get like what you call it like sweet deal, right? They just profit from there. So I think this is very very interesting. This has been their strategy.
Oh yeah, I saw in the same clip, right, that I was describing earlier, that the person commented that all 84 branches, right, in 8 states or something like that in the US, like this morning, they all open for normal business, rebranded as JPMorgan. Like if you want to talk about fast, right, you say okay, acquired, okay, sure, maybe the paperwork you all do really fast and everything, but to rebrand the 84 outlets within like a day, I think, I don't know, do you think that this was like maybe planned maybe weeks in advance already, not just like
conspiracy theories? Yeah.
No, we also don't know what does it mean by rebranding. You can just put a banner to say, okay, this is now be under JPMorgan. I think it's can happen. But you're talking about like all the renovations and stuff.
Yeah,
I don't think so. Yeah.
No, okay,
Quite sus.
I
But
start.
definitely it's not like, I mean, from the public, right? We just got to know it like
Yeah.
1 or 2 days ago. But inside, right? I mean, in terms of the contingency plan, let's say like, oh, if the deposits drop below what level, we do what. This kind of things, right? Back and forth discussion, I think happen for a month already. So at least, so I think that's the not surprise, at least for the insiders. All right. Then we will close for these topics for today. Thank you very much for watching. See you in the next one. Bye bye.